Welcome back. You're tuned in to Chartbusters here on CNBC-TV18. Well, Satin Creditcare, that's the stock that we're tracking. How is growth panning out for the company? How are the collection efficiencies as well going on? And where's the asset quality headed? Well, to discuss that and more, we're joined by the chairman and MD of the company, Mr. H.P. Singh. Hi, Mr. Singh. You know, your stock was buzzing a couple of days ago, but that could be stock market dynamics. We wanted to understand what's going on with business. So on the dispersals front, if I look at Q1 on a consolidated basis, you dispersed close to around 1,700 crores. At pre-COVID levels, I think it was upwards of around 1,800 crores odd. So could you tell us, are you back to pre-COVID levels on dispersals? If you could give us a rough number. And also your collection efficiency, what's it at as we speak?
Yeah, so our dispersals are back to the pre-COVID levels of about 1,800 crores plus. And in terms of our collection efficiencies, we are again, somewhat at the levels where we were at pre-COVID, which is at about 97 to 98%. Dispersals which have happened in the last 1.5 years, our collection efficiencies are 99% plus. So we are back both in disbursements as well as the collection efficiency back to the normal days.
Right. Mr. Singh, I just wanted to understand the new guidelines that came in from the RBI in April 2022. We understand that, that's made life a little more difficult with regards to higher customer rate rejections coming in for you. Have you experienced the same? And in light of that, what's the kind of growth that you can guide for this year?
So I think, the regulations came on 1st of April, so post that, we've been able to do a disbursement of about 1,500 crores standalone in microfinance. Even with the rejection rates inching up from about 30% to about 35 to 40%, we've been able to maintain this growth momentum. And going forward, it's going to be there. The only thing is that what we have to do, we have to capture household incomes and everything across it, which is being done fairly now, basically. So the growth momentum will keep on happening in the next quarters also.
Okay, and what does that mean then in terms of an AUM growth? If you're sounding reasonably optimistic for FY23, what are you guiding for?
So we are guiding for about a 20 to 25% growth for FY23.
Okay, and just wanted to understand a little more about these rejection rates increasing from 30 to 35 odd percent, 38 odd percent. Have you so far seen any sort of impact with regards to the asset quality with these rejection rates increasing? I mean, the ones that you've given the money to, have they been better quality assets? Can you give us a sense of what kind of credit cost do you guide for?
So technically what is happening is that borrowers who have been over leveraged will not get credit. So that means that your credit quality is going to be better than what it used to be before after these new guidelines have come in. And credit costs, technically, we will not have any further credit costs in the future quarters. We've done about write-offs in the first quarter, so I think we'll maintain that. No further credit costs coming in our balance sheet.
What could you give us a number? What should the credit cost number look like for FY23?
I think overall for the whole year, I think it'll be close to about 4%, 4 to 5%. That's it. Yeah.
Okay. All right. What about your restructured book, sir? What is the absolute number of your restructured book? And also if you could give us a percentage of your total book.
So restructured book is down to about 11% in the June quarter. And it is going further down technically. So by the end of this quarter, I think we probably will not have any restructured book left. All would have either come off or we would have written it off from our balance sheet.
And what about the new investor that has come in? We've had Florentry, which is, of course, founded by the former Blackstone head. They invested about 100 crores in the company for a 12.35% sort of convertible stake. Just wanted to understand, how does life change for you with such a large investor coming in? Have they taken any steps to professionalize the board, asked for a couple of board seats, etc.? How has life changed, basically?
So life probably does not change much, with the investor coming in. I think, what we are getting is value-added inputs from the new investor. They don't have a board seat, but, for us, it is more of interaction from the experience which we can gain from the ex-Blackstone head. So I think, that is what is going to be credible for the company as such in the longer run.
Would you give us a sense on your housing finance subsidiary? I understand that there was some sort of mark-to-market done in a couple of your assets out there. In the first quarter, could you comment on that?
Yeah, so our housing subsidiary technically has an AUM of close to about 350 crores. And it's been profitable for the last 2 years as such, and For an early stage housing finance company to be profitable in the first 3 years of operation, I think, that speaks well of the revaluation which we've really looked at in the mark to value asset of the housing finance subsidiary. So I think it's taking that forward that we've been able to do that. And housing finance subsidiary of ours has got probably the best asset quality in terms of, if you look at the GNP, our GNP is just 0.03 in the housing finance subsidiary, even during the pandemic. The pandemic had 100% collection efficiency for the housing finance subsidiary. So that way, I think the mark-to-market values has been pretty good, for us.
Very quickly, what are the NIMs you're guiding for?
For the overall microfinance? Or
Yes, overall.
For microfinance, we're looking at about close to about 10% odd, NIMs which is there.
Microfinance, 10%, right?
Yeah, 10 to 11%.
Okay, thanks so much, Mr. Singh. Good speaking to you. Thanks so much for joining in, giving us those details. We have run out of time on this show. You stay with us. Trading Hour comes up next.